All right. Uh, Welcome to the India market review for the week ending Friday, 28th July. So basically, July is also over. Nifty has done 10,000 on it finally. Uh, we have been dabbling around that question for about 2-3 months now. And we did a sort of, we had a bearish view in early June, then we had a bullish view towards the end of June, and said that 10,000 would come. If you look at the previous India market reviews, you will have access to that. You will know what we discussed. It's all on the uh, on BIC's YouTube channel, so you can go have a look at that, right? So we've been like you know doing a sort of discussion around it, as you all probably are aware. And if you went to BIC's YouTube channel and you went to the playlists, you will see that we have a India market review playlist, right? And in that India market review playlist, now 123 videos there. That's quite a lot. This is last week's video, and go have a look at what we discussed there, etc. Right, so that was the question at that time, and now we ask the question next is about, okay, what's going to happen to the Nifty now? Is it going to continue heading up, or can we expect a correction, maybe sideways, maybe down? Not really sure at this point. So let's get on with it and ask this question after the Nifty having made a pretty important landmark, psychological of course, but important nevertheless, achievement in its journey or its life. So as usual, we look at our global markets first, and then look at how the India markets are shaping up. After all, we are an interconnected world, and there's nothing like not being connected. So what's important definitely is John McCain, if you have been tracking the news, voted against the Obama repeal bill. Uh, Pretty much act of courage and faith, I would say. Important. You might be worth looking at, his speech that he gave, 15-minute speech yesterday in the House. And today, well, the news is out that, well, it didn't really go through. So anyhow, so we have the Dow Jones making a new life high. That was on Thursday evening. So it continues to, just keep tearing ahead. So very clearly in some really strong bull market that we are seeing in the US. It's really amazing as to the sort of strength that it continues to exhibit, um, and just go from strength to strength essentially, right? And where is that? Ah, right. So quite a strong uptrend in the whole Dow Jones index, and for all intents and purposes looks like it's just going to keep going up. Really nothing in the chart right now to indicate any sort of weakness. There were some sideways moves earlier, but now it's all like trending up, and that too on pretty decent and good volumes. The S&P 500 should more or less be the same thing, and if you look at that, well, okay, surprised that it's made a hanging man type pattern. Right, so this is, I'm just confirming the date, yep, 27th. So Dow Jones up, S&P 500 also up, but some hesitation looks like. We'll just have to wait and watch as to how this pans out. Looking at the rest of the world, looking at FTSE, well, that's clearly range bound, really nothing happening there. But this uptrend is now, it's come to that place, and we'll have to see whether that trend holds or it gets broken. No clue as to what it might be doing right now. Let me just 1 second. Uh, right. And then looking at DAX. So that's clearly now trending down, and that's definitely not a good sign. DAX seems to have put a pretty decent top in place in 12,900 on the DAX, and is clearly in a downtrend now with lower tops and lower bottoms. Looking at CAC France, that's been in a downtrend for some time already. It's one of the, from the top 3 indices in Europe, this is definitely the worst performer. Been in a downtrend for quite some time. All the indicators are also quite bearish right now. And then just for completion, if you look at the Nikkei, well, that's clearly going sideways, and there's really nothing to say as far as the Nikkei is concerned. Right. So that's the situation on the market there with the global market. So apart from the Dow Jones, which clearly was going up, everything else seems to be sideways or bearish on the global stage. So I'm not sure whether it is just some of the large caps in the US which are basically leading the Dow Jones up, because of course the S&P 500 has also moved up, though there is some some hesitation to that move, is how I would like to put it. But the rest of the world definitely not bullish at all. There is no upswing at all. There's no uptrend at all. So mixed views as far as the global market is concerned. If you look at India, well, it's just been rearing from from one higher level to another higher level. Uh, we have, well, for now, if I just put that there at right at the peak, there seems to be evening star in of a small proportion, is how I would put it. Let me just put this line at 10,000 and leave it there for future reference. All right. So clearly there's some bearishness which is definitely building into the market, looks like at this point, though this could be temporary. This happened here once before. We can see this, and then it just rallied up another 200 points, and it could continue to do that. In terms of some of the indicators which you can see on the chart, there is definitely a short-term divergence in the 15-day RSI, right? So that's markets trending up, but the RSI is trending down. On the other hand, MACD and everything else is strongly trending up. And while I don't have time to show that on this session, I can definitely tell you that the longer term RSIs like 30 days, 50 days, 100 days, etc., are not showing any divergence. So maybe a short term, a day or two type correction may happen, and then we continue to see the market going up perhaps after that, right? As of now, that's the view. Surely there is, if you're looking at supports, then this would be where the next support is, right? So that's where we are with the next support, all right? And can it come down to 9,700 or so? Quite possible. It definitely will not be the end of the uptrend if it does so. We'll have to just wait and watch and see how that pans out, right? So that is where the Nifty could come down to. Also 9,700 at this point is the 50-day exponential moving average, and then 9,400, 9,450 is where the 100-day exponential moving average is, and that's also another support zone. So supports at 9.7 and at 9.375, 9.4. These are levels to watch out for. On the other hand, if there is any correction at this point, looks like one should just keep buying. But we'll look at deeper into the Nifty stocks and try and get a sense of how that is. Let's look at the sector indices and see how those are panning out. Well, the Nifty Next Junior, which some time back was actually showing bearishness and underperformance, well, that's clearly bounced back up quite strongly, as you can see. And yep, so really nothing on the indicators to suggest anything else. So there is some strength there. Looking at the CNX 500, that's also gone up. So overall, the broader market also quite healthy and positive, as we can see, right? And then let's look at the banking stocks. Whoa, look at them, just go on a tear up. So they have now hit 25,000. Yep, almost 25,000 right there. Interesting as to how they are moving. So we have this a lot of clutter, so let me clean this up a bit. All right, so there. All right, and if I'm just going to take this line and extend it, just going to see if that is going to be some resistance in the future, right? So we'll have to wait and watch, and whether this is going to be some support in the future, this also will have to wait and watch. So just extending it and keeping it there for future reference, just to so we know. But well, if it does have to go there, then 27,000, 28,000 on the on these lines is, well, definitely a possibility. Definitely, with all this talk of restructuring the bad loans fundamentally and all that, there is a distinct possibility that could definitely happen. So Bank Nifty, important component of the overall Nifty. The banks definitely showing strength, especially the private sector banks, which is what mainly the Bank Nifty consists of. And if you look at the PSU banks, well, they're clearly laggards, and by a large amount, nowhere close to their life highs, which okay, so this is actually not a very good index in the sense that it's only from 2011 or 2012, and it actually goes back a long way. So we'll have to see how this goes. But anyhow, even from the 2015 peak, it's not the Bank Nifty, which, like I said, mostly private sector banks has been making higher highs, higher highs, higher highs, but this really has not done much, right? So that's the this as in the public sector bank. So they are continuing to be the laggards. So unless for some very compelling reason on a particular private sector bank, really no reason to be looking at sorry, of compelling reason to look at the public sector banks. There's really no reason to look uh, at public sector banks, um, you know, unless there's some really strong thing on a public sector bank. Otherwise, probably just best to stay with the private sector banks, right? Okay, so that's the banking side, as usual, quite nicely split between the private versus the public sector banks. Moving on to the other indices, the auto index. This is interesting. I wasn't expecting to see this at all. So we see a double top clearly. We see quite a lot of bearish engulfing patterns, and we also have clear divergences on the indicators, right? So This is potentially a sign of weakness that is building up in the space of autos. So is this the sign of things to come for the rest of the sector indices? Let's have a look. But clearly a double top there, and I don't think there is really any what do I say? Mm, uh, I mean, we'll just have to very carefully watch how this pans out. Let's look at the weekly chart. Looking it on the weekly chart. Oh wow, I'm getting a divergence on the weekly chart also on the MACD. So if you look at it, we are looking at an MACD bearish divergence there. All right. All right. There you go. So MACD bearish divergence very clearly there on the auto index, double top in the daily chart, plus a divergence, bearish divergence in the daily chart. All right. Let's look at capital goods. So capital goods clearly not doing anything. Looks like some okay. So they still haven't been able to break out of their life high zone. It'll be interesting to see what happens next. So will they actually be able to break out of these levels, as in this resistance? We'll just keep it there for future reference, or are we going to see something different happening here? We'll have to wait and watch on this. Okay. All right. So that's what we see here. If it does break out, this we might be looking at a inverted head and shoulder pattern. It's not very typical, but it still could be. Too early to say. Look at that on the weekly chart. You're clearly seeing resistance form and a very big 2 year, 2.5 year head and shoulder. Could be a head and shoulder inverted, not a head and shoulder bottom, inverted head and shoulder. And if that breaks out, then from 18,500 to 11,500, that's a massive, 7,000 points from here. That's almost 50%, right? So about 40% is what the upside could be. But right now, have to be a little skeptical and careful, not really sure. Okay, what's definitely interesting and positive is that there are no divergences. I'll probably be talking a lot of divergence talk in this IMR, simply because there is there's a technical indicators course which is going on. So generally that flavor tends to happen of whatever the hot topic of the week is during the course. So this is looking good. Unlike autos, capital goods is definitely looking good. Let's see how that pans out. The FMCG space, whoa, is really broken down. So that's, that breakdown really happened on account of um, ITC and that big crack. So attempts to recover, but I think it's looking a little iffy the way it's going up. Really no green candles. The bulls are clearly pretty weak. There is a very strong uh, gap here, but this could be also on account of only one stock, ITC, and the other FMCG stocks might actually be doing quite well. We'll have to just wait and watch. So let's see. Healthcare, right? So that's finally dropping, right? Healthcare and pharma. Let me also put CNX Pharma, right? Almost the same chart as the BSE Healthcare Index. Just a few changes in constituents between the two. So this is also looking quite weak. So after this up move in the pharma from about 12th healthcare, BSE healthcare from about 12,300 to 15,000, really no respite. See how it's hit the 200-day moving averages very nicely and could not really break out of that, and then now it has broken again through the 100 and the 50-day moving average, and it is very clearly moving down. CNX IT, right? So that's been a little bit of a what do I say? Bullish surprise. Again, surprise in the sense that if you look at the BSE IT also, yep, more or less the same thing. Surprise because with all this Trump talk and all that, the concern about what the future of the IT industry will be. But in spite of all those concerns, clearly that the BSE IT index itself is not showing any weakness in any significant manner. And if you look at the CNX IT, where we have marked it quite clearly, looks like it has broken out of a triangle, right? And those volumes are not very reliable because those are like Nifty volumes, they're not just uh, the index volumes. So this is now clearly breaking out. Let's see. Has taken support. Right, what did I take out? One sec. All right, sorry. All right, and we'll have to see, how it moves from here. It's 10,800. It's come to 10,500. Has taken support. All the moving averages are long-term moving averages are just there below. Be interesting to see how it moves up from there. And if it does do that, then IT could be the savior for the Nifty itself and take the market up. We'll have to wait and watch. So that's how IT is staying. Looking at the metal index, well, that's broken out quite nicely. Nice breakout, some good results by some metal companies like VEDL. Profits increased more than expected, but this whether this breakout is now being tested for on its support, and then whether it will go up after that, we'll have to really wait and watch. All right. Okay. So, yep. Right. So let's see what happens to metals. BSC power. The power index really not doing anything, not going anywhere as such, right? Just going sideways. So there's nothing happening in power. Okay. Then the realty index, well, that's really gone flat, right? Clearly the realty index has just gone flat. Really nothing happening on the realty index there, though it is sort of creeping up and might be going towards this 2300 mark, or yeah, 2300 level. And if it does do that, then surely it could really break out of that and go much higher. It's sort of a very weak breakout, very iffy sideways trend. It could just crack down or move up. Very unsure place to be in, the way the pattern is. Not sure that it'll go this way or that. So we'll just have to wait and watch and see which way that goes. Right. So that is the reality index, and that brings us to the end of the sector review. So really nothing, much. Interesting. I was just clicking, and CNX Pharma, as to how it has come back to its downtrend line and whether that's going to hold as a support or not will be interesting to watch. All right, so really nothing much where the internet is going. We'll have to see. It's raining here. Power cuts go, something happens. I have to switch internet, so there might be a break in the session. All right. So apart from which index was that? Not consumer durables, capital goods, FMCG, IT, right? Right. So apart from the IT index, which is showing some amount of strength, looks like everything else is more or less actually, quite either bearish or sideways, and it will be interesting to see which side the market cracks from here going forward. So it's definitely interesting times ahead, whether the market regains the bullishness or we do something and then it sort of just breaks down. We'll have to wait and watch and see how this pans out. Right. All right, so that brings us to the end of part one of the IMR, and we'll be closing the session here. And in the next session, in the part two, we'll start with the Nifty stocks and go through them in a comprehensive manner and see what the individual Nifty stocks have to say and if we can find any investment or trading setups on these. Right? All right, great. Thank you very much, and I will see you in the next session in part two.